Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis video for Monday, July 25th through Friday, July 29th, 2011 is sponsored by Realtic. All right, folks, we're going to get right in the mix today. This is a chart of last week based off the 10-minute SPY, which mirrors the S&P 500. What you can clearly see is we started the week on a sharp down note early on Monday, reversed by the end of Monday to close just slightly lower. Now, the key about this last Monday was the fact that it was our cycle turn date. And again, we announced this as much as a week in advance of this date and told our members here at InTheMoneyStocks.com, which, by the way, you can get a free trial to, that this was going to be the start of an up move in the markets. And again, look at how perfectly it worked out. The sharp down move and the up move, that's called a turn right there. See how the market turns down and then up? And then again, based on the cycle date, this should signal a reversal to the upside in the markets in the short term. Markets again continuing to move up Tuesday, Wednesday pause, Thursday up, and Friday flat day. Continue the up move throughout the week. You now, based off the pivot low here at around 129.60, you closed up 5 points at 134.58. So essentially a 5-point move in the SPY, which is the equivalent on the S&P 500 of 50 points. 50-point move on the S&P 500. All right, and that's a beautiful move up. Look at that move up right there. Now, the key was to take advantage of it. And again, I'm going to discuss a little bit about that. We're going to go into projections into next week and give you guys some possible plays next week to watch. All right, number one, projections have to be looked at in terms of what's going to happen with this debt ceiling. Obviously, it's going to be resolved. The question is it resolved Monday, Tuesday, Wednesday, Thursday, Friday? How is that going to play out? They're not going to let this government go into default. They're not going to let the U.S. go into default. The question is, does President Obama just do an executive order and raise the debt ceiling without any sort of deal, or does he do an actual good, budget cutting play here and ultimately have the market look at this as a long-term solution? And that's really what we're looking at now. I mean, obviously, the longer it takes, the more jittery the market will be early next week. Now, having said that, let's just go back quickly and discuss some of the plays here. On this date, I bought Broadcom and BAC, Bank of America, along with a couple other plays. Throughout the week, we profited on those plays. If you were a member of the Research Center, and by the way, the Research Center includes everything listed there, you were able to maximize profits on all of that stuff. All right, and again, I'm all the way out of BAC as of, I think, last Thursday when it was at the highs. Half out of Broadcom with a break-even stop for $2 to $3 right there. A couple other plays I'm not going to mention because we're still in as well. Maybe I'll give one towards the end of this video. But bottom line is, you have to know the turn signals in the market. And the reason we know this stuff is because we use proprietary technical signals and technical analysis. All right, it's easy to know this stuff when you know the technicals of the charts. So I encourage you to join the Research Center. We teach it there. Intraday Stock Chat, we teach it there. There's a free trial for both. Utilize this and make money. I mean, it's not brain surgery. I'm telling you right now. It does not take a genius to do. You just have to know the levels. And again, we guide you, we teach you, we give you swing trade alerts via your text message and phone or email. And again, you can utilize that to make money with us and learn in the process. Now, a couple other things to go over here, folks. First off, what we want to do now is look towards next week. So again, markets are up here, and if you go to the daily chart, I want to show you this because the daily chart's a very interesting chart. We have the two levels here. This is the previous pivot high, which, by the way, we had a signal to go short up in this range and maximize down to the target right down here before going long, and that's what swing trading is about, guys. On the daily chart, it's about going long or short for 1 day, 3 days, 5 days, a week or two, maximizing your profits, then switching your position and maximizing profits on the opposite side. All right, in any case, look at this level right here. This is essentially what you would think that the market would get to before it hits any major resistance, and that's at 135.50 to 55. Once you get there, you have to start to think that the market may reach a little bit of resistance on the upside short term. So again, the question is based on what we saw in futures on Friday evening, before the after hours closed. The futures were down then, but the question is where will they open in the next day or so? And again, a lot will determine if you get a deal on the debt ceiling tonight before the market opens. And again, there's been talk, by the way, that because of the Asian markets being jittery over this and the U.S. markets being jittery, they want to get some sort of deal in place before those Asian markets open on Sunday night. So we have to watch that. If that doesn't happen and you don't have a deal by tomorrow, I do think the markets will start out to the downside, and then we'll have to wait and see exactly what happens in terms of when that debt deal will be reached throughout the week. And I think the longer it takes, the more likely the markets get jittery. Finally, when you do get a deal, you will get a very, very solid rally. Probably be a one-day move up of 150, 200 points on the Dow as relief comes in. Shorts are going to cover. You're going to have a lot of these type of situations. So first resistance is going to be up in this range, right around the 155.60ish, 55ish level. Then if you get through that, you're going to go to double top here, which is 137.18. That will be the tremendous level. This is a minor level compared to this level, green line. So blue line's minor compared to green line, which is major. That will be a major level up there. All right, again, you should still stall here for a little bit, but it could very easily blast through on some sort of debt ceiling move. All right, once you're up in this range, you have to start wondering, okay, is the market going to have any sort of pullback? I do think, and this is what I'm going to throw out there right now, folks, I do believe ultimately the markets are going to go to double top here at the 137.18 level. I think it's just a matter of time. And the time factor will be a basis of, well, when does the market, get the debt ceiling relief and so forth. That will be the determining factor. But ultimately, I do believe you will see the market moving up to this level up here. All right, so mark this video right now, and we'll continue to keep you guys in the money on stocks, whether you're long or short. That's the way we roll. And by the way, small caps were ripping last week. Such a fun week on small caps. I'll give you guys a small cap towards the end of the video as well to watch and enjoy and make money off of. In any case, this is what you have going on right now. Those are your upside resistance levels. If you start selling off, and again, I don't think that happens until at least the double top up here. But if you do start to sell off, your first level is going to be right down here with these moving averages. And that's right around the 130, 150 to 132 area, which will be resistance. If you get through that, you have a minor level at this pivot low right here. Pivot low 129.60 minor level. And that's the turn date level. And then if you take that out, the big level that you're watching is this line down here. See how the 200 moving average is in red, and there's also a pinkish trend line right there? That level actually spans all the way back to 2009 lows, connects through 2010 lows, and is actually connected through the 2011 lows. So the question is, when does this break? When that breaks, that's when the catastrophe type situation hits the markets. I don't think that happens in the short term, to be honest. I really just don't see it. All right, I think it happens maybe later this year. That's probably my guess, actually. It does happen later this year. And then once that happens, once you break this line, that's where you have to start saying to yourself, okay, now the market is finally in a continued downtrend. And the market has made a top. And I believe that at that point, wherever the top is, if we pierce the double top up here, go a little bit higher, whatever it may be, in the short term, I believe once that happens, the markets you will be able to say you have a top in the markets once you're below this line, somewhere down here, that you'll have a top in the markets literally for the next year or two. 3, probably 5 years, possibly even. I would even go out as far as 5 years easily to have a top in the market, maybe even longer. And again, that all spans back to the monthly chart here, which is a master MA pattern. And again, these patterns are really everything you want to pay attention to. You have the M pattern, you have the A, and the question is, where's the top of the A? Is it up here? Is it down here? Is it up here? Where ultimately is the top of the A pattern? Because you have the M pattern stretching back to 1996, and then it goes up and down and up and down. The question again is, where's that top? And that top will be told by when you get through the daily line right here. This daily slanted line will signal that topping in. And again, based on what we're seeing, based on everything on the monthly chart, I mean, look at just the up move alone takes 4 or 5 years here, 4 or 5 years, 4 or 5 years, 4 or 5 years, up and down. So that tells me at least the downside move is probably 3 to 5 years. And so we're far away. I mean, once you put in that top, it's a top for a long, long time. Now, there is a chance of this pattern failing, but it's relatively minor at this point once we get that pivot top in and we get confirmed below that trend line. All right, let's go over a couple other things. I know I'm getting a little further ahead based on looking too far out, but let's just focus on what we saw on Friday. Friday, again, markets were kind of choppy sideways. Notice how the highs from Thursday could not be taken out. So again, that almost was a leading indicator that you might have a little down move after hours on Friday, which we did have, possibly even into Monday based on that debt ceiling. And what that is that's telling you, see how the high here is right here and you didn't get up there? That was telling you that there were traders out there that were recognizing that a deal may not get done, and they were taking profits every time the market was up in this range. And ultimately, there's a little selling into the close with a small pop. But again, after hours, we did see the spiders down about 50 cents or so, which is not a huge move. That's about 5 points on the S&P 500 or so. But nonetheless, it was a decent move down. All right. So again, watch the news. Watch Asia tonight. Watch what the dollar starts to do. Because again, if there's no debt ceiling resolution tonight, I think the markets are a little jittery tomorrow, from based on everything that I saw. Geithner has been out over the weekend saying, "Hey, listen, guys, there's going to be some sort of resolution." He's trying to calm the markets just in case there's not a deal. That's his job right now. Calm the markets. Don't have any major reactions, because ultimately a major reaction could cause more hardships for the economy that's trying to recover here that hasn't really recovered. I mean, let's be honest. They've pumped trillions of dollars into this market. The Fed has, the government has, and it really hasn't recovered. I mean, you still have unemployment 9+%. And that's just the government's number. Remember, the real unemployment number is something like 18%. But in any case, they can't afford a hiccup in this market. It would just send us back into recession, which again, I think ultimately we're going to go into, but that's for another story. And by the way, folks, I'm neither bullish nor bearish on the overall market. All I'm doing is short-term, swing trading, which is what the new style of trading is. Make sure you understand that. Long-term investing is dead. I said this 5 years ago. Kramer has been saying it over the last year. You have to be a manager of your own portfolio, which means, after you get a significant up move of 5-10%, you got to take profits, wait for a pullback, or go short for the pullback, and then vice versa. You do it one way, then you do the other way. A good swing trader, and this is what we're creating in the research center, makes 100% a year. All right, now again, as they improve, people in the research center, our members, they get closer and closer to that, and we have research center members. I do over 100% a year just in my swing trade portfolio alone. And again, if you can do that, that's the way, folks. Be a winner. Be a profitable player. Don't ever let your money sit there, because ultimately, look at 2000. In 99 and 98, 97, you thought you were making great money, you got wiped out. Then in 2007, going into 2008, wiped out into 2009 again. And every time you're getting killed on it, ultimately with inflation, you're losing your money even if the market's flat over that long period. So you have to become a manager. Imagine if you sold at the highs in 99, 2000, and then you bought again at the lows after the tech bubble crash, and then you sold again in the 2007 highs. 2008. I mean, it's just think about the amount of money that you'd have if you managed it appropriately. And you have to use common sense. Emotion is the worst thing. If you use emotion, you think logically, think like a Vulcan in Star Trek. I don't know how many of you out there are Star Trek fans, but if you think like that, that's the way. Nothing goes up forever. Remember that. What goes up must come down. Think about that. So when the markets are soaring, take some profits. Wait for it to pull back or go short. The key is, again, understanding the technicals. Now, let's go to a couple of charts. Let's take a look at the dollar. The dollar was a great call, by the way. I made a call last week that the dollar would weaken, and that's exactly what happened, which helped the rally. When we were trading up in this range, I said, hey, listen, guys, we're coming into a cycle date. The analysis shows that based off of this downward move right here and 1-2 sideways pattern, and here's the cycle date right here, that you're going to have a downward move, because this is an in spirit of bear flag. And in spirit of patterns are something we teach in the research center as well. But again, sharp down move right here, sideways consolidation, that's in spirit of bear. That tells us we're going to go lower, and look at the dollar fall the rest of the weekend. We're looking at the UUP chart here, which is the ETF for the dollar. But in any case, that's a beautiful move down. Look at the support line we had in there. Went right there, kissed it, and paused on Friday. But the bottom line is, it made sense, because a weak dollar pushes the markets up, a strong dollar pushes the markets down. So a weak dollar, if I'm expecting a weak dollar, it would coincide with the cycle move to the upside as well, which is exactly what we got. So again, that was a great call right there on the dollar. All right. If we take a look at gold, gold has had a monster move. I expect, if there's no debt ceiling resolution, that gold will be up even more tomorrow. There will be a point where I look to short gold, maybe if it rallies another $3 to $4 into the 160 GLD level, which is the GLD, which is the ETF for gold. I would be considering a possible short there. One thing I pointed out to research center members in the nightly video is this started to look like choppy consolidation. So see how this up move is strong and then choppy consolidation? So it almost tells us that we have bullish consolidation here, which could yield another pop. And again, I'm not long or short this right now, but I'd say above 160, I'd start to be interested in a little bit of a short. I give out my exact trades in the research center, folks. And again, by the way, no losers in over a month in the research center. All right, in the hot charts and alerts, which is part of the research center where I put out my personal trades, no losers in over a month. Not many people can say that, folks. It's astounding. And again, you always can look at the track record on there by going into the archives. So again, if you're a member, go look at the archives to gain back. I think the last small stop out loser was like on June 16th or something like that. It's almost a month and a half away at this point. In any case, enough of that. Just continuing to watch this. Again, above that level, I'll probably be short. I don't think I'd be a buyer until it pulled back significantly at these levels. Gold's had a major run. Let's take a look at the SLV. SLV had a nice little day. Again, 138 right here was a little resistance. You popped above it. You confirmed above it. You pulled back into that level. That was a buy, and now you've popped off of it. Again, if gold's up tomorrow significantly, most likely silver will be up decently as well. So I would not be surprised. And that's only if. I want to repeat this, guys. Please understand this factor, because this is huge. Gold and silver will be up tomorrow if there's no debt ceiling resolution. If tonight, before the Asian markets open, or even in the early morning hours, if they come to some agreement, then you will, and I repeat, you will see a sell-off in those commodities because they're safety plays. People go to them for safety. So if again there's a resolution, then that's okay. The U.S. government has figured this out, at least for the short term. Now we can relax. People will sell gold, go into stocks. So understand that, guys, and remember that. Very important. USO, let's go look at the oil trade here. Oil trade, I've continued to be bullish on this trade here off of this up move. See this up move right here? Up move to the 200, and then look at this choppy consolidation. This is in spirit of bullish consolidation, and I said as long as it doesn't close below the 20 moving average, which is right here, then you start to look for a break to the upside. And sure enough, it looks like it's starting to happen here. I gave this out, and I continue to be a fan of it. I think ultimately the USO probably will go higher. Even though it's going to be a choppy road, this is my first area of target here, which is right around $40.50. And again, see that choppiness right there? It's beautiful in spirit of bullish consolidation. And bullish consolidation, as long as it doesn't get below this 20 moving average on a closing daily basis, tells us it should go to this first resistance level here at $40.50. And by the way, all this analysis, folks, I'm giving you the broad overview of just some odds and ends, but you get nightly videos of 30 plus minutes in length in the Research Center. You get daily market reports with master levels on gold, on silver, on the 10-year bond, the S&P 500, you name it. We're giving it all out. Hot charts and alerts have our actual trades. Trades that I post in there are my actual trades with buy alerts. And again, they're timestamped, so you have it all there. We send out alerts. If you sign up for our alerts, you get a text message alert or an email alert of the trade. I mean, it's amazing stuff. We have so many other things in there. We have No Hype Live, where you come and talk to us live, Chief Market Strategist time, once or twice a week. We do live broadcasts where you can ask us questions. It's all included there for really $49.99 a month, but it's actually a free trial. Take the 7-day free trial and try it out. And again, and a lot of our members make so much money. Like, think about last week. Last week was a perfect week. There was no losing trades. The cycle date worked perfectly. It was great. Many of our free trial people ended up making enough money to pay for years of the service right there in that one free week. So again, utilize it correctly, and you'll come out a winner. All right. In any case, let's go over a couple other charts here. Apple Computer continues to be up. Still isn't back to that little pivot high here, which is above right around $400. Interestingly enough, after earnings came out last week, I did end up shorting Apple Computer, and I shorted it and ultimately made like $4 on the pullback after hours. I moved out of it for a nice little profit, but ultimately it fell back off that the next day, off of that gap up. But look at the move on Apple here. This is a tremendous move. I think this is something like 20% move up in Apple shares, maybe even 25%, and now it's consolidating. As long as it does not close below the low from earnings day, it should continue to go sideways to up. If it closes below here, you're going to see a full to gap fill right down here. So actually, that's not a bad little trade short term. If you get a daily close below this level, then look for this gap to be filled around to 377.50 or so. Okay. Other than that, as long as it stays above this, it could actually go back above 400. I think the after hours high from earnings was about 404 to 405, and then again that could be definitely tested and maybe even a little bit higher. Would I be shorting this at this point? Not until it gets below on a closing basis here. Then I would short it to here. I don't think it's worth a short until it at least gets to 410, make it really go a little bit higher. And then once the cycle date comes to an end and we have a down cycle coming in, then that might be a level to go on the short side of Apple, but not until then, folks. You have to know what you're doing here. Be smart about it. All right, next week there are going to be more earnings, folks. There's more economic news coming out. It's going to be a big week next week. I'm looking forward to it. Money is going to be made. Small caps last week, folks. Let me just give you a couple small caps. In the intraday stock chat and throughout the nightly videos in the Research Center, I gave out this stock. I said on Friday morning when the markets open, I said, guys, CEU, China small caps have been running. I said, I like CEU here at 92 to 93 cents. I said, you could basically buy it up to 97 cents and make money. That's what I said to my chat room. The stock goes from 92 cents to $1.25. 30%, folks. Actually, over 30%. Basically, 35% gain in one day. Intraday, folks. That's a move right there. 35% gain. And a bunch of my members bought from 92 cents all the way to about 97, 98 cents and made a crap load of money. That's just one of the small caps that ran last week. I had other ones. I had ones going up 25% after we talked about them. I might have more in the coming week, folks, so be ready. I think biotechs next week could get hot. What you're looking for is one good piece of news out of one small biotech, and the rest will start to make big moves here. Be ready. All right, it's not going to stop. One trade to watch for next week that I'm a big fan of. This is a Research Center play. I'll give it out to you guys for free. This play right here. This is 20% short in this play, Motor City. It's a great play. Look at this thing down here. It finally has made a turn off the lows. And again, if I zoom back in a little bit, take a look. had a good breakup off this in spirit of. See this candle right here? This is a reversal. See the red down candle, reversal, green candle. That turns it into bullish. 1, 2 sideways inside bars. Now an up move. Tons of shorts in this thing, folks. 20% of the float is short. This thing, any sort of big move up, you go easily to this level right here at about $8. $8 is first target. If you get through that, you could easily go to this pivot high right here, $8.50, and then ultimately to $9. All right, and again, that's one of my favorite plays out there. All right, enough of this. Go enjoy the last part of your weekend here. Join us here at In the Money Stocks. Take the free trial and profit with the pros, folks. We're going to teach you everything. We're going to give you trades, and you'll come out winners in the market instead of being losers. All right, bottom line, we'll see you there. Take care.